Bitcoin's been on an amazing run for 2023. Despite the fear and the bearish narratives around US debt ceiling crisis, the inflation fears, the interest rate rises, the banking collapses, the threat of a looming recession, amongst many other bearish narratives in 2023 alone, the market has been climbing. We've been up just nearly at 100%, obviously now with a slight pullback. So is this rally set to continue, or are the bears going to take control again and punch these markets down? We've got a lot of data to get through to figure out what's potentially happening in June and to end out Q2 and looking slightly forward to Q3 as well. So don't go anywhere. Like and subscribe if you haven't already. I know you're not subscribing just yet, but if you are sharing the content with a friend, thank you very much. Drop us an emoji and let us know if that is you. All right, guys, we are getting into a update for June moving forward. We have been doing this as part of the series, so you can check them out on the channel under the macro playlist. I'll leave a link to that at the end of the video. So the main thing we want to have a look at here is just what is possibly going to happen in June. We're going to see more of the same. Are we going to see mega drops? Are we going to see mega moves to the upside? I want to be able to answer those questions decisively, up, down, or sideways. Or is it going to be a slight up, down, or sideways? We'll see. But first things first, let's go through the macro stuff that we have looked at in the past already. We've been looking at where this cycle currently sits. And in terms of the timing, it seems like we are pretty much well sitting in the beginning stages of a new bull market. We've got our 360 to 400 days to the downside, which we have now done. And it looks like we are starting that next leg out. Yep, I still understand that many are anticipating further downside, but in terms of the cycle and where we currently sit, it just doesn't seem likely. We've got a few other things to get through with that as well. Also looking at the S&P 500, this thing also looks like it wants to push higher. And of course, if there is more strength in traditional markets, then there is some risk appetite, and the risk, it tends to move over into riskier assets to make bigger gains. That's the way the game works. But more on that later. Let's just stick with some of the cycles where we're currently at and continue with the data for BTC. So in terms of the 4-year cycle itself, which is counted from the low to the low, we're not looking at any other reasoning for 4-year cycles. Some people measure 4-year cycles from the halvening, which of course is roughly a 4-year cycle as well. Others measure tops to tops. Others expect the same sort of pattern to play out. None of that. The 4-year cycle is about the low to the low to the low. That's what we're looking at. And then how we gauge what happens within that cycle is, where does that top come in? Does it come in halfway through the cycle on the left-hand side or on the right-hand side? That tells us whether it is strong or weak. We'll get to that later on. But right now, it seems like the 4-year cycle is playing out relatively well. We've got our lows in place, so that helps us moving forward with what direction we think the market is going to take and what analysis we start to look at when we revisit history, looking at the past itself. So looking at the previous cycle, June was a peak, and the cycle before that, you had June was in the accumulation zone before we also had another small peak with the second June after the low. But I just want to turn our attention to the monthly returns before we get to the quarterly stuff. In terms of June itself, negative 0.9. So basically a flat month overall when we measure the returns for that month. Now, there are some big moves to the upside and big moves to the downside, but we have to understand in which part of the cycle we're in, which is why I spent so much time just then explaining where we anticipate, where we think we are in the cycle based on our timing aspect. Now, there's a lot of other things that come into it, which I'll mention in a moment. In particular, our Gann swing indicator, looking at those swing moves to the upside, which indicate more upside. This is based on over 100 years of data across all markets and typically has a very high chance of playing out. So if you learn how to use a Gann swing indicator, you can find a link to this in the video description and instructions on how to use it on with future videos as well. That is going to help you out a lot with understanding how to read the market in terms of the market trend on a macro cycle. And speaking of macro cycles, for anyone interested, we have our price increase coming up on the 1st of June. So right now you can get it at nearly $400 off before the price increase. So this is TIA Premium that has full of trading courses, exclusive communities, and helps you get started in trading and investing long term. So check that out before the price increase, and you'll be grandfathered in to that lower price for as long as you are a member. All right, so going back to BTC right now, looking at the cycles in terms of what's happening with June, well, negative 0.9, not much if we average these out. But in terms of the cycle, 2022, obviously the big one, big drawdown, CFI collapsed. We're not in any sort of situation like that right now. I understand that many will still be pointing to every single bearish narrative. However, I just point to the chart and we have seen higher and higher lows. So what the investors are doing, not my opinion, but the facts on the charts are that they are buying up these lows rather than last time they were selling as there was bad news. Whereas now they are buying up the lows. So massive one there, but that was a bearish year. 2018, massive bearish year, negative 14%. You saw a lot of negative months through that period as well. And then we had 2014 was also a bearish year. Not much to the upside. You had a previous May, which was a good month, but then a lot more downside as well. Now, I've only got a few months in here, but we just want to focus on May moving forward from this point. 2013 also had a pretty big bearish year. Now, the outliers there, if we take out some of these months here, 2019 was pretty big, but we've seen quite a few big months already through January and into March as well. So that's potentially balancing out where we currently sit in the market. So May is somewhere looking like we're going to get about a negative 4, negative 5% if the market doesn't move too much from today over the next 2 days until we close out May. So we don't have a figure there yet, but moving forward for June, basically not much is going on there. So yeah, if we just look at those bearish years and the years that come after the bearish year, which is what we're potentially in now, we've got a 26.6% return for 2019, and for 2015 there was a 15% return, and for 2016, 27% return. So some pretty good. June has been a pretty good month for the market after a low has come in, even though the average has been negative 0.9. July also been a pretty good month there. The average is 9%, and using those years after the low has come in, so 2018 and basically around that 2014 and January of 2015, well, we can see July, positive month, 2019, negative month. But remember, it did have a massive, massive pump for 6 months at that period. So we've gone on a pump right now in 2023. Maybe we are due for a little bit of a slowdown, whether it's a smaller move to the upside, like some of these 10% or 2%, or maybe a slight move to the downside, 6 or 3%. Basically, we're in a flat territory here. Now, splitting up this bull market, which we've covered here on the channel, and this is one of my tweets on Twitter. Go and check out the links, Twitter and Instagram. Don't get scammed out there. Just use those links if you choose to follow me on those social media platforms. We are looking like we are in this second 6-month period of the bull market. So I'm just dividing this bull market up into 6-month periods from the low to the top. And basically it's come out at about 36 months each time. So divide that by 6, give us a brief look at what's going on in the market. The second period is what we look like we're going through. So slightly different to the other 2 cycles. You can see the second period was basically all down, but it was only about halfway between the entire move. So although it was down, it was basically just catching up in time, coming back to test some of the lows. It had already broken out on pretty big volume and pretty massive run of just over 300%. So it needed some time to cool off. Whereas in the first 6-month period, it was still churning sideways and just attempting to break out. So we got to that second 6-month period where it finally broke out and then also again went sideways. So we've got a couple of data points here, and what we can see from the market after it has had a reasonable move. In one case, yeah, we did have a little bit of a move, a quick drop to the downside and then a breakout. And in this case, we had a very big move and then a pull back, just buying time, waiting to accumulate more before that final pump. It seems like we could potentially get more of the same. So we've had an intermediate move compared to these other 2, 300% here, and that was approximately 100%. Now we've seen that 100% move here. So potentially we just grind sideways, testing some of those higher and lower prices to see where that supply and demand comes in. We still have overhead resistance at around 31,000. We still have underside support at 25,000. So if we potentially get more of the same, then we can expect that move of around $6,000 between that 25 and 31. which also lines up relatively well with the market not doing too much for June when we get an average of the percentage of the moves. You can see right here, negative 0.9. Now that's at the end of the month. Within the month, there can of course be moves 10, 20, 30% to the upside, 10, 20, 30% move to the downside. But when that month finally closes out, just the average has shown that it was negative 0.9, basically not much going on there. So in that case, it can start to lead us to our first conclusion for June. And that means, drum roll please, and it's not going to be very exciting, is that maybe we just see more of the same when the month finally closes out. Maybe we see a test to the upside, a test to the downside, and the month sort of trends sideways. That's exactly what the first stage of the bull market should look like to continue to have support in the market. So that sounds shitty, and I can already see people going to the comment section to say, well, great, you told me it goes up, down, or sideways. Forget that. That's what new people do. If you're an experienced trader or investor, if you now know that information and you can understand that the market is probably, not guaranteed, but is probably in a bull market, with that information, if you're smart, you would then say, I'm going to buy those dips, look at the percentages to the downside, what the possibilities are, look at the resistance levels. I'm going to get into those dips because the overall structure is still to the upside and the overall trend and the cycle is still bullish. So if I already know that and I get some of those dips in June, if I get them, then that gives me opportunity to get into the market without being a fearful sheep that just waits and waits and waits for a 24, or they wait for a 20, or they wait for a 15 or a 10 or a 3, whatever these numbers are that have been thrown out in the comments section. So now that you have that information, sure, up, down, or sideways, I get it. I don't want to hear that either. But I'm looking at this being an overall uptrend, and whatever sort of moves I get to the downside, understanding my risk to the downside, where those levels could be, which we have covered on the channel. So make sure you are subscribing, sharing the content with a friend. Then you can start to position yourself with an asymmetric risk. Asymmetric risk meaning there is less downside and a shit ton more upside to go. But if you feel that the market still will collapse from 15 below 20 or 15,000, then that's why you're probably still sitting on the sideline and hoping for further downside. As we talked about earlier in the video, the Gann swing indicator is also indicating that this cycle is up, that this is the start of the bull market. Before I get into that, just a reminder again, top of the video description, our TIA premium membership is going up in 2 days time. So if you want to lock in the low rate, learn how to trade, invest full time across crypto, Bitcoin, stock markets, and the real estate cycle, which is the most important cycle that is in existence right now in the world. Get on board with that before the price increases. And for the Aussies, if you're still having some problems with Binance, there is a 0% trading fees with Swyftx using that link in the video description. Okay, back to BTC, looking at the Gann swing indicator that you can find in the video description as well. The swings here, this helps us identify the trend of the market, and when these swings are broken to the upside, typically you do not see them go back down in a macro view. Okay, so it depends on the time frame you're looking at, which is why we use it for all of our short-term and long-term trading. So this is just showing further clarification of the trend. If we have higher highs and higher lows, then we're in a bull market. If we have the opposite, lower highs, lower lows, then we're in a bear market. Note this low here. This didn't happen on most exchanges, so just keep that in mind. And we're also at the bottom of a market, which is where there is more confusion than if we are just in a raging bull or bear market. Basically, nice, clear trends. You can see the downside, very clear trends. You can see it again at the beginning. We had a fake out to the downside, a break, a high close, and then the market resumes a trend to the upside. Same sort of thing happened to the downside. Lower highs, lower lows, lower highs, lower lows. Then we had the break. So this is telling us that the cycle has changed from a bear to a bull. We might have a 1 or 2 breaks to the downside, the fake outs, but watch where that close comes in, which is exactly what we were talking about earlier here, and of course with the overall returns for June itself. The other thing to note is the time frames of the move to the upside. You can see in basically all the cases, once the move begins, whether it's to the downside or the upside, you'll get more months, in this case, more periods moving to the upside than to the downside. If you're in a bear market, you're going to get more periods to the downside than to the upside because the momentum is bearish in that case. In this case, the momentum is bullish. You've got 2 to the up, 1 to the down, 3 to the up, 1 to the down, 10 to the up, 2 to the down, and so on. So basically you just go through and you can count these using that swing indicator. So that's telling you as well that the market has now flipped. Look at what we've just seen. 3 months up, 1 down. We've got 1 month up here, 1 down as well. Maybe we trend sideways. Maybe we just give a little push to the tops just to take those out and fake it all out again. So this is also swinging us to that bullish scenario. So going back to what we were talking about in that just previously, what to do with the information, we're looking at this being a bull. So any of those opportunities we get to the downside, we take. And finally, the S&P 500. If that macro stuff wasn't enough, the S&P is also looking up. It's breaking past its key 50% level. This is a huge area for the market to break past. Often it's not given enough emphasis by technical analysts, wherever they may be or whatever they do, but the 50% is a huge key level. Never lose that level on your chart. That will make you a lot of money understanding where that 50% level is. Look what's happened just in the recent history here. We had support and then a breakdown of that level. And then we had, again, resistance, and we started to break through it. So as we get to the top half here, strength, we stay on the bottom half, weakness. Okay, so once we got that in our tool belts, in our toolboxes, then we can move forward and say, well, we've got higher lows, we've got a break of 50%, we've got break of key resistance levels, the market cycle has turned up. Any opportunities we get to those downsides, we take. And finally, the psychology of the market. It basically goes in alignment with what we've talked about, but it's just easier to see it on a nice, clean, single line chart here. Now, much of what's happening at the moment out there is this is the belief of the market. We're in a bull trap and we're about to capitulate and dump to new lows, whether it's the stock market, whether it's real estate, whether it's Bitcoin. There's a lot of media talk about going to new lows, but potentially what we're seeing based on a lot of the technicals is that we are just in the start here. We've seen that bear trap, that sell-off in March with the banking crisis, and now the markets across the world have all pushed much higher than their March lows, including Bitcoin, including the stock markets. So we're potentially at this stage and we got this much to go. The public will come in late as per usual. Even institutional investors will come in late as well because they're just waiting to see what other people are doing, what other investors, what other hedge funds are doing. And at the end of the day, most people end up buying these tops. They get sucked in, hoping for the market to return again, and then that's when the capitulation happens. So just looking at this is probably what we're in based on the indicators that we've already covered in the video. In terms of June and the range, yes, I've told you it's probably going to be a bit of a churn just based on what we've seen in the past when we get to these stages of the cycle coming out of the low and then a nice move to the upside. Hopefully, if you've already got your bag in place, we start to break out and then churn sideways, break out and churn sideways. But I can understand that there are many still hoping and waiting for much further downside because they probably missed the bottom, probably missed buying in the March low, and are just hoping for downside. Unfortunately, the charts aren't saying that, and it looks like we're going to have a bit of a range between that sort of 25,000 and then to the upside of the current top at 31, and hopefully maybe we get a break of the mid 30 levels. So a nice healthy trading range from those mid levels to the mid 30s there. So something pretty reasonable, but for now we still haven't broken out of the tops and the support is coming in at around 25.8. It's a bit of a lackluster move, but hopefully I've given you enough to understand what to do in case those opportunities come up. If that has helped you, let me know in the comment section, because without a doubt, there are going to be a few saying, well, screw that, it's up, down, or sideways. It's far from the truth. There are opportunities to be had, and if you know how to take them, you will be making a good, sweet profit in the long run. Stay patient, stay with the market, stick on the channel, hit that subscribe, share the content with a friend, and of course, any of those links in the video description, if you want to use them, they are there. Guys, thank you very much for your support and attention today. I'll see you at the next one. Until then, peace out.